Okay, this is the second part of taking a look at the scenarios. And so we had looked at Natasha and Daniel, number 4, Aidan and Isabel are married and live together with their 2 sons, Raphael and Edward, age 3. Aidan and Isabel have ITINs instead of social security numbers. It means they're a foreigner. They're not a U.S. citizen. U.S. citizens get social security numbers. An ITIN is a number that the IRS gives to someone so that they got some number to put on their tax return. So Aidan and Isabel, maybe both of them, maybe one of them, actually worked and they need to do a tax return, but they have no social security number to put on the tax return, so the IRS gives them this ITIN number. Okay, so that tells you right there that the parents are not U.S. citizens. Okay? They did both work. They have wages. They provided all the sons for their, all the support for their 2 sons. They've got some daycare, and the boys themselves are both U.S. citizens, and the boys have Social Security cards. So the question becomes, can Aidan and Isabel claim their sons on their joint return? So you need to take a look at those same things we talked about in part 1, where you determine are their sons qualifying children. So is there anything in there about the parents having to be U.S. citizens, or is it just the sons have to be U.S. citizens, or none of them, or all of them? Who has to be a U.S. citizen for them to claim their sons on their joint tax return? Okay? And secondly, are they eligible to claim any kind of tax credit? So we have gone over the tax credits that relate to children in our book. And so here is chapter 7 in your book, and we have stuff about the child tax credit, earned income credit, the child independent care credit, otherwise known as the daycare credit. Okay, those are the main 3 credits that relate to children. And so you have to know the rules on all of those. So if we take a look at the child tax credit, okay, this credit goes basically with whoever claims the child. So once you determine if they can claim the child, then they would basically be able to get this credit. It's $2,000 for a qualifying child dependent that is less than 17. And then they have a $500 credit for all other dependents. So if it's a qualifying child less than or more than 17 years old, 17 or more years old, or maybe it's a qualifying relative dependent, such as a parent or something else that you're claiming as a dependent, but it's not a qualifying child under 17. Okay, then at least you still get $500. Okay, and so here it tells us the rule: the child has to be under age 17, has to be a U.S. citizen, the child does, and it has to be claimed as a dependent on the taxpayer's return. Okay, and so you have to go through those 6 tests of qualifying child that we already said you'd have to do anyways. Okay, and all qualifying children have to have a Social Security number. So this is not saying anything about the parents having to have a Social Security number. Okay, and Okay, so there is about the child tax credit. We also have the earned income credit. Okay, now this is a refundable credit, so it is one of the most valuable credits there are out there. Okay, and you can get the earned income credit even if you don't have any children, but it's fairly minimal and you have to be really low income. Whereas you can make a reasonable still amount of money and get the earned income credit, depending on how many children you have, etc. Now this one, the child doesn't necessarily have to be your dependent. So if you are divorced, say, and the court gave permission to the ex-spouse to claim the child, so you can't claim the child even though the child lives with you. However, the child does have to live with you. Now, here there are various things you have to look at, okay? Number one, does the taxpayer themselves, so this would be Aidan and Isabel, do they themselves qualify to be able to use this? Number two, does the taxpayer have a qualifying child for earned income credit? And what is the amount? You have to be able to calculate out the amount. Okay, so does the taxpayer qualify? So there's 7 rules, and the taxpayer has to meet all 7 rules. So there are limitations for the AGI, okay, and Aidan and Isabel, okay, combined wages $39,500, okay, and so for joint filers, they're filing joint, okay, and they have 2 children, so anything, the phase out would begin 25/2/20, but it ends at 53/30, and they're in there. So they would at least be able to get some earned income credit based on this. So they pass this first test, okay? If they had more than $53,330, they would be disqualified from using earned income credit. Social Security number, the taxpayer and spouse, if filing jointly, both of them, plus any qualifying children, must all have Social Security numbers. So that right there lets them out. Married filing separate is not allowed. U.S. citizenship or resident alien status is required for the entire tax year, not just maybe for the end of the year. Okay? Foreign income exclusion is not allowed. Investment income, you can only have so much of interest or dividends type of income, and it's $3,650 for this year. And you have to have earned income. In other words, wages or running your own business, self-employment income. The stuff you sweat for is earned income. So those are the 7 tests. Now in this case, you have to pass all 7. In this case, Aidan and Isabel do not have Social Security numbers. They do not pass test number 2. But if you're looking at other scenarios, you have to consider these 7 situations. Then you have to say, does the taxpayer have a qualifying child? Now, a qualifying child, for purposes of the earned income credit, is slightly different than a qualifying child for dependency status. So, you can take a look at these. they're the same, except the child doesn't need to meet the support test, okay? So in the dependency, the qualifying child dependency, it says if the child can more than half support themselves, okay? And the child must live in the U.S. home for more than half of the year, okay? A slight extension of the domicile test. So if you can pass the qualifying child, if the child can pass those, except for these couple of things are different, okay, then you can go ahead and say that this is a qualifying child. Qualifying child can't be claimed by more than one person. So only one person can get earned income credit on that child. So if the child could be claimed as a dependent by two different people, only one can claim the child and only one can get the earned income credit. Okay? All right. So if all of that applies, then you can get earned income credit. That part of the book goes how to calculate. Here's the child and dependent care credit, okay? And so the daycare credit. So Aidan and Isabel pay daycare, okay? So Congress has laws. To be eligible, the dependent must be under the age of 13 or be a dependent or spouse of any age who is incapable of self-care. So if you had an older than, if you had 13 or older child, but that child was handicapped or something, then that would be okay. You could still use that child as a qualifying child for the daycare credit. Okay, the child's parents are divorced. The child need not be the dependent of the taxpayer claiming the credit. So that's the same as earned income credit. Don't have to be the dependent, but has to live with that parent. And we call that the custodial parent. Okay? The divorced mother with custody of a child may be entitled to the credit even though the child is a dependent of the father. So that's the same as earned income credit, but not the same as child tax credit. The child tax credit goes with whoever claims the child as a dependent, but earned income credit and the dependent care credit, these credits go with who the child lives with regardless of who claims the child as a dependent. Okay, and this shows how to calculate out how much would the credit be. Okay, so you should be able to answer those questions then. Lisa's 36, Oliver Singer, her 45-year-old brother who's permanently disabled. So this tells you right off she can't claim her brother as a dependent. So you have to look through these, look through those dependency rules and figure out why can't she claim him to answer that question. Can she use Oliver, though, to get earned income credit, even though he's not her dependent? And we just said that for earned income credit, that qualifying person doesn't have to be a dependent. Does Oliver fit in those other rules for her to use him as for earned income credit?